What if I told you that investing just $5 a day could make you a millionaire by retirement? Would you believe me? You don't need to be wealthy to start investing. In fact, the wealthiest people in the world will tell you the secret isn't a sudden windfall, it's consistency. Today's topic is all about the overlooked power of small, regular investments. Whether it's $50, $100, or $250 per month, putting your money to work early and consistently can set you up for financial freedom by the time you retire. We're going to explore how you can turn modest contributions into 6 or even 7-figure retirement accounts. I'll also guide you through some of the best financial tools available in 2025, from traditional options like index funds and Roth IRAs to newer ones like crypto staking and fractional shares. If you've been waiting for the right time to start investing, this is it. The magic of compounding: why time is more powerful than money. Let's begin with a simple truth. The earlier you start, the less money you actually need to invest to become wealthy. That's because of compound interest. Suppose you invest $100 a month at an average 8% annual return, which is the historical average for the stock market. Over 40 years, that turns into more than $345,000. Increase it to $250 a month, and now you're looking at nearly $860,000. This is not magic, it's math. Compounding means your money earns interest, then that interest earns interest, and so on. The longer your money stays invested, the more exponential the growth becomes. That's why starting early, even with small amounts, is far more effective than investing a large sum later in life. Building the right mindset before you invest. Before we dive into investment vehicles, let's talk about mindset. Investing is a long game, not a get-rich-quick scheme. You don't need to time the market. You need time in the market. Don't wait until you get a raise, a bonus, or pay off a debt. Start now, even if it's only $25 a month. Treat your investment like a non-negotiable monthly bill. Think of it as rent for your future freedom. The mindset shift is key. You're not spending this money. You're planting seeds for financial independence. And most importantly, you don't need to understand everything perfectly to begin. The best way to learn investing is by doing it. Where to invest? 6 financial vehicles that work. Let's get into the heart of the strategy. These 6 investment options are ideal for small monthly investors who want big results over time. They're simple, low cost, and proven to grow wealth if you stay consistent. Index funds, the no-brainer starter investment. First up are index funds. These funds track the performance of a market index like the S&P 500 or the total US stock market. When you invest in an index fund, you're essentially buying a small slice of hundreds or even thousands of companies at once. The beauty of index funds lies in their diversification and low fees. Over time, they outperform most actively managed funds. If you're investing monthly, this is your safest bet. Great options include Vanguard's VOO, S&P 500 ETF, Fidelity's Zero Total Market Fund, FSROX, and Schwab's SCHB, US Broad Market ETF. Many brokerages let you invest with as little as $1, making this the perfect entry point for beginners. Automatically contributing to an index fund every month is one of the easiest and most effective ways to grow wealth steadily. Roth IRA, tax-free growth for retirement. A Roth IRA is one of the smartest tools available for retirement. You invest post-tax dollars today, and all of the gains you make over the years are tax-free when you withdraw them in retirement. That's a massive benefit. If you're young and just starting out, you're likely in a lower tax bracket, which makes the Roth even more valuable. The 2025 contribution limit is $7,000 per year, or about $583 per month. But even if you're investing far less, say $50 or $100 monthly, you'll still benefit enormously over time. You can open a Roth IRA with platforms like Fidelity, Vanguard, or M1 Finance, and start building a portfolio with ETFs or index funds inside your Roth. Think of it as the ultimate retirement piggy bank. Dividend-paying ETFs, passive income that grows. If you like the idea of getting paid while you sleep, dividend ETFs are for you. These funds consist of companies that regularly pay out part of their profits as dividends. Not only do you get income from your investments, but you can reinvest those dividends to buy more shares, further boosting your compounding. Some excellent dividend ETFs include Schwab's SCHD, Vanguard's VYM, and JP Morgan's JEPI. These funds are relatively stable, income-generating, and perfect for long-term investors. Even $25 or $50 a month can begin building a stream of income that could later supplement your retirement or be reinvested for greater growth. REITs, real estate, without the hassle. Real estate investment trusts, or REITs, let you invest in property without actually owning or managing buildings. REITs collect rent from commercial or residential properties and pass much of that income back to investors as dividends. What's great is that you can start with just $10 or $20 a month. No massive down payment, no tenant drama. Some strong REITs include Realty Income, ticker O, the Vanguard Real Estate ETF, VNQ, and online platforms like Fundrise. Real estate is a powerful asset class that also provides inflation protection, making REITs an attractive part of a diversified investment portfolio. Crypto staking and ETFs, a new age investment option. Cryptocurrency is still a relatively new asset class, but it's here to stay. If you're looking to spice up your portfolio and take on a bit more risk, small monthly investments into crypto, especially through staking, can offer passive rewards. Ethereum, for example, can be staked on platforms like Coinbase or Lido to earn returns just for helping support the blockchain. For those who want crypto exposure without holding coins directly, ETFs like BITO, Bitcoin Futures ETF, or IBIT offer a regulated entry point. Keep in mind, this is volatile territory. Don't invest more than 5 to 10% of your portfolio in crypto, and only use money you're okay with seeing fluctuate. That said, the potential upside over decades can be significant if managed wisely. Fractional investing. Buy a piece of giants. Gone are the days when you needed $3,000 to buy a share of Amazon or $400 for Tesla. Thanks to fractional investing, you can now buy pieces of these companies for as little as $1. Apps like Robinhood, Public, and M1 Finance let you build your own custom portfolio of top-performing companies, even if you're on a tight budget. This method is especially useful for beginners who want to invest in companies they believe in without breaking the bank. It's also a great way to learn the stock market by doing it, one small piece at a time. Putting it all together, a smart monthly strategy. Let's say you've committed to investing $250 each month. How should you break it up? Here's a simple starter allocation. $100 to index funds for broad market exposure, $50 into a Roth IRA invested in ETFs, $40 into dividend ETFs for income, $30 into REITs for real estate exposure, $20 into crypto or alt assets, and $10 into fractional stocks of your favorite companies. This diversified approach allows you to benefit from different sectors, asset classes, and growth opportunities while minimizing risk. The key isn't perfection, it's consistency. Pick an amount, set up auto transfers, and stick with it. Time is the real wealth builder. Let's revisit why this works so well. The market rewards those who start early and stick with it. If you start at 25 and invest $250 a month with an 8% average return, you'll likely end up with over $870,000 by age 65. Start at 18 and you're looking at $1.5 million or more. But even if you're starting at 35 or 40, it's not too late. The point is that time is more valuable than the amount. The sooner you begin, the easier it is to build serious wealth, even with small contributions. Mistakes to avoid along the way. There are a few common mistakes that can sabotage your long-term gains. First, don't panic and stop investing when the market dips. Corrections are normal, and they're actually buying opportunities. Second, avoid high-fee investment products. Always check the expense ratio of a fund. Anything over 0.3% should raise red flags. Third, Don't chase trends or try to get rich quick with risky stocks or crypto bets. That's not investing, that's gambling. Stick to your plan, trust the process, and stay focused on the long term. Tools that make it easy. To make your life easier, use automation tools. Platforms like M1 Finance let you create pies and auto-invest in them each month. Acorns rounds up your purchases and invests the spare change. Fidelity Spire helps you set goals and track progress. Empower, formerly Personal Capital, lets you see all your accounts and net worth in one place. The less you have to think about it, the more likely you are to stay consistent. Conclusion. Let's take a moment to really absorb everything we've discussed. By now, you've seen how incredibly powerful small monthly investments can be when combined with consistency, time, and the right financial vehicles. Whether you're starting with just $25 a month or committing to $250, the math is clear. Small actions today can lead to massive outcomes tomorrow. Investing isn't just for Wall Street insiders or people with six-figure salaries. It's for you, the everyday person, the student, the part-time worker, the busy parent. It's for anyone who's willing to play the long game with discipline and patience. And the truth is, you don't need to know everything about finance to start. You don't need a finance degree. You don't need to follow every market headline, and you don't need to perfectly time your entries. What you do need is a commitment to your future self. You need the courage to begin, the discipline to keep going, and the wisdom to stay the course. That's where the real wealth is built. Not in a single perfect trade, but in showing up every single month, even when life gets busy, even when the markets look scary, even when the returns seem small at first. Every dollar you invest is a vote for your freedom. It's a vote for your peace of mind. It's a vote for a life where you don't have to work until you're 70, where you have options, not obligations. A life where your money works harder than you do. Imagine waking up one day with enough in your accounts that you no longer have to worry about bills, retirement, or emergencies. That life doesn't happen overnight, but it absolutely can happen if you take small steps now and compound them over time. So here's the challenge. Commit to a number right now. Pick an amount, $50, $100, even just $20, and set it aside every month. Open an account. Choose a fund. Let your money start working while you sleep. It may not feel like much today, but 10, 20, or 30 years from now, it will be one of the best decisions you ever made. Your journey to financial freedom doesn't require perfection. It just requires action. Don't wait until you have enough to begin. The truth is, you build enough by starting. Make your first investment this week. Let this be the moment you changed your life. Not through luck or a lottery ticket, but through smart, steady moves and a belief in your future. And if this video gave you the push you needed, hit that like button, subscribe for more practical financial wisdom, and drop a comment below sharing your investment goal or what step you're taking next. Let's grow together, one small, powerful step at a time.